Hello and welcome to Commodity Champions. I'm Anisha Gupta. It appears to be a golden period for traders of the yellow metal. The gold prices have been on record-breaking spree, hovering at around 71,000 per 10 grams in India, and globally the prices have seen a sharp uptick at over $2,300 per ounce. One of the factors supporting the prices is People's Bank of China purchasing spree. China's central bank bought gold for the 17th straight month in March, adding 1.6 lakh ounces to its reserves. It now holds more than 72 million ounces of gold. What are the other factors behind the surge in prices, and is it a good time to buy or invest in the precious metals? Well, to discuss this, I am now joined by Philip Newman. He's Managing Director at Metal Focus. Philip, hi, thank you so much for joining us. How would you look at this one-sided run-up in gold prices that we've seen in the last couple of weeks now? I mean, it seems to be ignoring all the negative data, whether it is about the dollar index gaining, the very strong U.S. non-farm payroll data, or just about a 50% probability now for a June rate cut.
Well, I think you hit the nail on the head on a couple of points there, Manisha. I think firstly, the run-up has been quite amazing, caught many of us by surprise. There's no doubt about it. And I think you're also right to say that to some extent, the market is ignoring news which could be potentially gold negative and really focusing on news and really running with it, news that could be gold positive. So I think it has been quite staggering. I think in terms of the run-up, much of it has been speculatively driven by institutional investors, that weight of money coming into the market. I think that's been one of the key factors that we've seen over the past few weeks and really for much of this year as well.
Philip, when you look at the Chinese buying, what is the sense that you're making of that? I mean, this is, of course, the global central bank buying. We do understand that there's a lot of retail buying happening as well. There have been various forwards that I have been reading on how on Shanghai Exchange there are deferred contracts being traded and of large volumes.
Well, I think there's a few things going on there. You talk about the central bank. It's not the only one that has been buying. Obviously, the Chinese central bank has been, I think, the leading light in that area. We've seen other ones also purchasing this year, really to some extent carrying on the trend that we saw really kick off in sort of mid to late 2022. Of course, that was a record high last year, very close to that on a net basis. We think this year as a whole, for 2024 as a whole, will be another, I think, pretty decent year. It may not get to the heights that we've seen over the last year or so, but I think overall, I think the buying could still be very decent. And away from that, the retail market in China and really elsewhere in East Asia, I think has still been very decent. I think it's really been quite interesting, quite revealing to see retail investors really buying into this rally. We haven't really seen those liquidations. We've certainly seen those liquidations in Western markets, but I think it's been really quite instrumental that buying has been relatively upbeat at a time of these eye-watering, these record prices.
There are also a lot of conversations, Philip, on how there's a lot of paper money involved into it where you don't really need a delivery of gold, and that really seems to be keeping the prices one way.
I think that's absolutely true, and I think that's what we touched on in the very beginning of this discussion in terms of the speculative flows of money, those inflows into gold that we've seen. Whether that's on the likes of the CME, or you mentioned it in China as well, or whether that's happening in the over-the-counter market, lots of different avenues for that money to flow into the gold market. And I think all of that has been very, very supportive and obviously driving the prices that we've seen. And I think the other element, of course, is the safe haven bid. You look, of course, what's going on, not just in Ukraine, but more recently, the heightened escalation or the heightened tensions in the Middle East as well. The bombing of the embassy in Syria by the Israelis. I think that certainly added to that uncertainty. So I don't think we can ignore that bid either.
With the kind of run-up that we've seen, Philip, if I take a step back and go to 2022, and the low in that year was 1643, We're standing at 2,300 right now. So in matter of 2 years, in that sense, we've seen nearly $700 of a jump up come in case of the gold prices. And even from where we stand right now, there is no correction in sight. There also are concerns in the market that gold, from being a wealth commodity, is just turning into yet any commodity. How are you looking at all those debates?
I think there's some truth there, but I think to my last point in terms of the safe haven bids, I think that's been quite important. I think gold's role in terms of as a portfolio diversifier, I think is playing out here. We think about the run up that we've seen in equities at times this year. So if you are an investor, and for example, if you had gold at 3 or 5% of your portfolio, the run up in those equities may encourage you to come into the market to add to gold to maintain, give or take, that rough percentage that you've been holding in gold. So I think it is really fulfilling all of those roles. In terms of a correction, I think that's something we have to be really mindful of. Is there much more that it can run up? It does seem that the run up has been so strong in such a short period of time. I think that's something that, as Metals Focus, we are certainly mindful of, and are, I think, watching out for, that we could see a correction, in the near term.
So, Philip, what is the sense that you're making of the prices from here on? Because 2,300 is what most banks and brokerages put out as the target for end of this year, which we've seen happen already, and there are still 7 and 8 months to go for this year. How much higher do you think can we go? What is the kind of new support levels that the street is now talking about?
Well, I think we'd have to add Metals Focus into your list that expected perhaps gold would get to these heights much later in the year, not in a sort of weekly basis, so to speak. So I think from our point of view, again, we are mindful that in the near term, sometime this quarter, we would suggest there will be a correction. I think that is ultimately quite healthy. That could be fairly steep, but we think from that point, while investors may step out, and if it's that steep a correction, investors could wait for that selling momentum to ease before they come back into the market. You may also see some investors selling into that weakness, looking to really book the profits that they've been able to achieve at these heights. And that could also add to the downward pressure. But we think that would be relatively short-lived. And once the Fed starts to reduce rates, we believe that would encourage investors back into the market, even if those rate cuts perhaps are now less dovish than we were expecting, just a short while ago for this year. And so we think we could revisit these levels that you're seeing now. But again, you have sort of a U shape in terms of that price in the market. So a short-term correction, perhaps down into even perhaps as down as far as the 2000s, I think is a possibility. And maybe as low as perhaps 2100s, but you could see that again getting down into the 2000s in the coming quarters. But then a sharp upward move as those investors buy into that weakness, and then that could again drive prices back to these highs that we're seeing now. Could we get back to 2400? That's possible. That may well be a price for next year rather than this year. But of course, you just have to see how rapid that price increase has been over the past few weeks. So I think that's where we see the price over the next few quarters.
Oh, absolutely. These are just chasing levels that many of the markets are doing right now. But Philip, would that impact Indian buying then? Because the retail buying in India for the month of March was a complete washout, is what jewelers tell us. April is the beginning of various festivals, and then by the time you come into May would be Akshaya Tritiya and wedding season beginning as well. Any indications that you see from India at buying at these levels?
Well, I mean, like a lot of markets, if the price was to, if we war game this, if the gold was to stabilize at these levels, then although that hits consumer budgets, of course, that would encourage buying to return. It's a volatility, which is the challenge for the likes of buyers. You mentioned those key festivals. But I think that if we do have that correction in the coming weeks, I think that would encourage incredibly strong buying in the Indian market. So I think the timing of that, I think, is really, really important. But as I said, it's that volatility, which is, I think, the big issue. And I think is certainly on the minds of my colleagues. As you know, we've got an office in Mumbai. And I think that's something they're very mindful of for the coming weeks.
Also, at a time like this, we do anticipate or see increase in number and sense of recycling or exchange in old gold into new. Have we seen that number across various global markets?
I think what's been really interesting, so we're in the period now of producing our first quarter data that we deliver to the World Gold Council for their gold demand trends report. So that research is ongoing. But I think for some markets, what we've seen in terms of the level of recycling has been lower than we would expect. I think for exchange, that's feedback I'm waiting for from my colleagues in Mumbai. I would suspect it will be higher, but I would perhaps wait for their feedback. But in some of the markets that we're looking at the moment, the recycling response hasn't been as strong as maybe we would expect it.
So that tells us that people are holding on to their gold with expectation that the prices can go higher from here. And as you mentioned, that there is some correction perhaps coming, but that would be healthy. And people who perhaps missed this bus would want to get it in those prices as well. Philip Newman, thank you so much as always for joining us and making sense of this one big bull run that we've seen come in for gold. But with that, we're heading into a short break. But coming up, we shift focus to silver, which has also been rallying strong. Michael Renzio of the Silver Institute joins us when we return.